topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk 4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Hey, welcome and good morning. It's a great Monday morning to get started. You know, we're coming to 8 days away from tax filing deadline. So if you haven't gotten your taxes filed yet, get in there and get your taxes filed or get yourself an extension of time to file. Now, you got to remember, you know, these extensions are just an extension of time to file, not an extension of time to pay. So, you know, you can get the extension, but if you're going to owe money to the IRS, you're best to send in what you think you're going to owe. That way, you know, you don't have extra penalties and interest. If you overpay because you did an overestimate, that can be refunded. It can be left there as part of your estimated tax payments, whatever you need to do, but make sure you get that extension filed. Even if you can't pay, I mean, get the extension filed because, you know, there's too many penalties out there that the IRS loves to issue, and they're going to issue them against you, you know, either way. So, you know, get that done and at least alleviate that timely filing penalty and then get it filed within, you know, the next 6 months. You know, that's one of the things that we always look at for, you know, people that we're filing taxes for. And especially, you know, when we're working with, you know, truckers, owner operators out there and other small businesses, sometimes it takes a little bit longer to gather all their paperwork and get everything right. You know, when you hand in a profit and loss that somebody else has done and it has $100,000 in Ask My Accountant, well, that's not a complete financial statement. You know, it's more of just a joke. You know, you're not giving the information that is needed to prepare your taxes, and then you expect us to kind of decipher what you meant. That just doesn't work. You've got to actually dot the I's, cross the T's, make sure you got the right bookkeeping. And if, you know, you're a trucker owner operator out there and you're looking for somebody that's going to do bookkeeping that knows truckers, go to truckertaxtools.com and get in there. Rates start from $25 a week for bookkeeping. You can't beat those rates, you know, anywhere out there. So if you're an owner operator, we thank you. We appreciate what you do. This economy keeps rolling because you're out there moving the goods from one location to another location and getting the transport. I mean, you know, we've got people transporting hazardous material, you know, your fuel, your gas to power your cars, you know, goods that you're buying at the stores. That's what these truckers do. And so we thank the truckers out there for everything that they do. And of course, we are protected by, you know, the police and, you know, other people that are helping in the community, firefighters and so forth. And we thank them for their service as well. And of course, our military. You know, we're talking taxes. And when we talk taxes for truckers, owner operators, something special stands out for truckers more than any other part of the industry. And, you know, this goes for transportation, and that's per diems. You know, so what are per diems? You know, per diems basically is a standard allowance for meals and incidental expenses. And so it's a deduction for those in the transportation, industry. Comes out of IRS publication 463 for travel, entertainment, gift, car and truck expenses. You have two choices in the transportation industry. You can either save all your receipts for meals and incidental expenses and deduct those at tax time, or you take the IRS's standard meal allowance, which is currently $80. So $80 is a significant increase from the 69 it was for most of 2024. That rate change happened in October. So, when you're doing your 2024 taxes and you're looking at per diems, you've actually got to separate the number of days on the road, nights away from home, from January through the end of September, and then from October to the end of the year. Now, we don't know what the rate's going to be, if they're going to even change the rates in 2025. It took them many years to actually change the rates from 69 to 80. That first rate change went from 66 to 69 in 2021. But it is going to stay the same, I would assume, for a couple of years. So we'll see what the IRS does with per diem rates this year. So now, also different for 2024 versus 21 and 22, it's still only 80% deductible. So you don't get the 100% deductibility of per diems in 2024 as you did in 22 and 21. That's out there. So making sure you're tracking those nights away from home. So what does this mean for you as an owner operator truck driver? Maintaining a good log of your days on the road. Now, we're talking about nights away from home. So if you're just doing transportation within, your city and just day runs and everything, you're not going to get per diems or meals. But if you're going and staying away from home, that first night you leave, you get credit for half a day. And the day you come home, you get credit for a half a day. All the days in between are full days on the road and are at the full $80. Half days, $40. So either keep your manual logbook. Maybe you can look into your ELD to see how it's tracking. You can use some of the apps that are out there that can track per diems and everything else for you. You have different options to choose how you're going to track your nights on the road. Now, IRS qualifications. We always got to have qualifications for this stuff. We got to know what's the detail behind this. And so for truck drivers to be eligible for per diems, this is funny. You've got to be employed in the transportation industry, and your job must keep you away from home on a regular basis long enough for you to sleep away from home. Now, in the transportation industry, that means your job has to be directly involving moving goods or people by truck, train, bus, ship, airplane, or barge. So those are your options. That's what the IRS shows in publication 463, so that you know that you qualify for per diems. So something else that has to happen in your industry and for your life, and it's one of the biggest things that the IRS puts out there, you must have a tax home. And to qualify for a tax home, you're required to incur expenses to maintain the home while you're on the road. So whether you're renting an apartment, renting a place to live, paying a mortgage payments, these are items that you're paying for to maintain your home. Now, if you're just living in your truck and you have no home, man, you're like a turtle. You take your home with you everywhere you go. So don't be the tax turtle. Get a home. Have a home that you have to maintain expenses for. So track those days, track those nights on the road. Make sure that you're dotting the I's and crossing the T's with this so that you're getting every single deduction for the per diems that you can get. Now, this is owner operators, independent contractors that are out there running your own business, sole proprietors, not W-2 drivers. So if you're a trucker and you are a W-2 employee, you're not going to get per diems that are deductible on your tax return. But you still could be getting per diems from your employer that are non-taxable. There are some good things. There are some bad things with getting per diems or even taking per diems as a trucker. We're going to talk about those good and bad right after this break.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. Hey, first off, don't shoot the messenger. All right. I'm out here, we're talking about per diems and, we're saying, hey, per diems are not deductible on your tax return if you're a W-2 driver. Hey, it's not me that sets the tax code. Jared, this has been going on since 2017 with the Trump tax codes that went into effect that removed per diems being deductible for W-2 drivers. I love the chats and I love the information, but we don't set the code. If you don't like it, call your congressman. We say that all the time to people who are complaining that taxes seem to be unfair to them. And as I say in a seminar that I give with OOIDA's foundation, Truck to Success, if you don't like the tax code, call your congressman. Most congressmen never found a tax they didn't like, and they love the tax. It brings more revenue in to the IRS and to the U.S. government. That's just way of life. It is. But as an employee, you can get per diems as a W-2 driver. Now, they're not deductible on your taxes. They're usually paid as an allowance or a reimbursement that is non-taxable to you. But that means usually when an employer is doing that, they have lowered the wages that you're going to be earning that are taxable for Social Security, Medicare, and federal and state income taxes. Now, that may seem really good to you as an employee because you're receiving money that is non-taxable. But sometimes the bad part is it lowers the W-2 wages you're making, lowers your income, which then can impact you if you go to file for like a mortgage or a loan, because they don't see as much income coming in. And the mortgage company is not going to take into account that you're receiving this reimbursement for per diems, which is meals and incidentals. Now, when the employer pays them, they're going to do it on a fixed amount of daily reimbursements for lodging, meals, incidental expenses when you as an employee is away from home. But it cannot be more than the federal per diem rates. An employee's got to actually be able to prove the time, dates, places, and business purposes of being away from home. Now, when you're doing this, they could actually do per diems on a local area. So if you're going to a place that has a higher per diem rate, they could actually give you the higher per diem rate. Most trucking companies that we have worked with will stay to the meals and incidental expense for truckers, which would be the $80. And if you're an employer out there and you have truckers under your employ as W-2 drivers, having a per diem program for your drivers can provide you also great savings. So at the $80 rate, you could see an increase in savings of about $1,740 a year by paying per diems instead of W-2 wages to your employees. Now, you'll have some W-2 wage, and you'll have some that goes to them as per diems, but you're lowering what you're paying them per mile or per day out there as the employer. So, that's the hard part. You've got to look at it. Now, if you're a corporation or LLC or S Corp, you are supposed to claim actual expenses, not take the per diems. So you also got to include that and think about that as you're moving from a sole proprietorship that is fully taxed for Social Security and Medicare on net earnings plus your income tax on your adjusted gross income could impact that decision to move from LLC single member to maybe an S Corp, or going from sole proprietorship to an S Corp as well. So you need to make sure that you're taking a look at that and dotting the I's and crossing the T's and getting a true estimate what the cost is to be an S Corp versus a sole proprietorship. And those are kind of numbers we run for each and every one of our drivers, our businesses that are out there. Is, does it make sense? Is there enough savings to move you from a sole proprietorship, single member LLC reported on Schedule C, or should you move to being an S Corp? If the numbers don't work, don't do it. If there's not enough savings out there, don't do it. Because there's got to be good savings in order to make the decision to move from a Schedule C business to an S Corp business, because you're going to have additional expenses, such as filing an additional return, additional complications. S Corp, you're going to have payroll, and many other complications that you're going to have out there for you as moving from just a regular reporting on Schedule C to filing an 1120S or even a 1065 partnership return. So let it make sense, make a decision, and then decide, how you want to go. Hey, don't forget to connect with us at taxtalk4u.com and subscribe over there. And you can also send us messages, whether through the radio station or through Tax Talk for You. We love to get the messages out there. We had Gregory that sent us a message about investing in a business. We gave him an answer to his question. He's gone to a couple of different people and gotten a couple of different answers. What you got to do, in Gregory's case, he invested in a business. It looks like the business went under. He's just an investor loaning money, getting an override on revenues, and getting repaid his loan from the way I've interpreted it. And he's gone to a couple different people and asked, hey, should I be getting a K1 from this gentleman's S Corp? Should I be getting a partnership return K1? What should I be getting? And you get different answers. Well, one of the best ways to do it is go back to the original paperwork. What was your agreement when you put money up into this business? Were you a partner? Were you considered to be an owner? Were you getting a certain number of shares or partnership interests? Now, if none of that applies, you're not an owner, you're not a partner, you're really not an investor. You're going to be more of a venture capitalist, a loan person. So, you've got a loan or venture capital that you've put into this business, and you can either write it off as possibly bad debt or bad investment. There's a couple of things you've got to look at to make a decision on how you're going to be able to take the write-off of investing in a business. Get everything written out in good detail. Not just write it out, have it spelled out, have both parties sign it so you know what you're getting into. If you're going to take on a partner, you're going to invest money in a business, you're going to loan the business money, what is it going to be? And then read the agreement. And, I always recommend if you're going to do an agreement between two parties, get a lawyer involved, get an attorney, have a good tax guy, tax coach that's going to give you the guidance that you need when something like this happens. Sometimes going on a loan costs you more money in the end. Sometimes just assuming that you know what the rules and the laws aren't going to help you. If you had an attorney involved in an agreement and you're putting up money that's a loan, whether it's business debt or investing, your lawyer may get a personal guarantee from the person that you're loaning the money to behind the company. Or if there's multiple people in the company, then, maybe they've tied the loan to multiple people or the equipment in the business. So there's a lot of things for you to look at to make decisions on which is right. Hey, we had questions about qualified business income deduction, and we're going to talk about QBID right after this break.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes no matter what level trucker you are. Life on the road can be taxing, but that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. Like I said, we love questions, and we got a question, this week about qualified business income deduction, QBI, QBID, section 199A, all the different terms that come with this qualified business deduction. Qualified business income deduction started with the 2017 tax code, with the Trump tax code. It's one of the tax cuts that's also going away at the end of 2025 unless Congress acts. Hopefully Congress acts to keep this in place, because as we explain this to you, for those people that are in business, whether it's a pass-through business, sole proprietorship, you can benefit and do benefit from the qualified business income deduction, QBI. Basically, this is the way QBI works. It is based on the net amount of business income with exceptions. Investment income, such as capital gains and losses or dividends, are not included. Income from businesses located out of the United States. Interest income not properly allocable to a trade or business. So there's a whole list of other exceptions and everything, but those are the general exceptions out there. Now, QBI is only available for owners of pass-through businesses, including Schedule C, even if you opted to take the standard deduction and you're not itemizing. So this is a separate line item on your tax return. If your business is a specified service, trade, or business, your QBI could be limited or disappear entirely once your taxable income reaches certain limits that are out there. Yes, there's limits. So what is a specified service, trade, or business? It's where the business depends on the reputation or skill of its employees or owners. It's kind of a broad definition. It's going to include things like law practices, medical practices, consulting firms, professional athletes, accountants, financial services, members of the performing arts, investment management firms, and more. So there are exceptions out there, and there are limitations that are out there. Now, it is a 20% deduction. So, if you're single and your taxable income is below $200,000, you have a 20% allocable deduction available to you. If you're single and you make between 200 and 250, you get a partial. If you're single and making over 250,000, you get none. Married, on the other hand, is basically double the single. 400,000 and less, you get the 20% deduction. Married filing jointly between 400 and 500,000, you get a partial deduction. If you're over the 500,000, you're going to get no deduction. And this is if you are a specified service, trade, or business. see how those limitations apply when you're specified service, trade, or business. Now, if you're not what they call SSTB, specified service, trade, or business, but you have income greater than income limits of 230,000 or 464,000 for married, then your QBI can be limited to greater of the 50% of your share of the W-2 wages or 25% of your share of the W-2 wages paid out in the business plus 2.5% of qualified property. Wow. See, there's a lot of things you got to go through and a lot of calculations that are there. Whether you are a specified service, trade, or business, or whether you're not, you've got to look at what limitations that are out there. Now, for most people doing their taxes, if you're under that 232,000, whether you're specified service, trade, or business, or whether you are not, wow, sorry about that. I thought my coughs were gone, and still get a little frog in the throat. Your tax software, if you've put it in correctly, is going to do most calculations out there. When Jim had asked this question of us, he said that, hey, the box store didn't know what QBID, Section 199A was, because most people don't know what the calculations are, didn't study it. They rely on the software to do everything for them. And if you're in a lower tax bracket, the software does it for you simply, easily, and it doesn't matter whether you put the business in correctly or not. But once you're over that, you need to know the details behind this deduction in QBI to make sure that you're calculating that 20% correctly in order to get the full deduction that you can get. See, it makes significant difference for you on your personal tax return, being able to get that full 20% deduction where possible. So, we go through these calculations. We know these calculations. If you're owner or operator, small business out there, and you're looking to make sure you got your QBI calculated correctly, pick up the phone, call us over at Trucker Tax Tools, and let us work through your taxes to make sure that you're getting the biggest deduction possible for QBI. You want to make sure that you're dotting your I's, crossing your T's to get the deductions that you need to be able to save yourself as much money on taxes as possible. And we had another question come up, and one of our consultants was on the phone, and when people ask questions, sometimes these guys don't know the details and everything about ins and outs of taxes. They will get you set up with a meeting with one of our enrolled agents, tax attorneys, CPAs that are going to work with you to find you every deduction that's out there. And a lot of times when we're doing tax planning for our truckers, owner operators, and small businesses that we serve, things like this really make a difference and help you save money. And if you want that consultation, call us at 877-996-2477. Again, 877-996-2477. And, let us help you keep your truck and your on the road and your taxes to a minimum. So Jim asked, what's the Augusta rule? My guy called me and goes, hey, have you heard what the Augusta rule is? Yeah, David. I know the Augusta rule. You know, it is a tax strategy that we talk about. And some business owners can take advantage of to save money for their business while getting a relatively large tax deduction. So the Augusta rule allows you to actually rent out your home tax-free for 14 days or less in a year. Now, hey, as I always tell you, there's catches to it. There's rules to it and requirements and records that you've got to keep to be able to apply the Augusta rule in your business and on your personal tax return. And guess what? We're going to tell you all those rules right after this break.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Stop spending time doing paperwork. Go to truckertaxtools.com, a solution built specifically for truckers. Truckertaxtools.com makes your life run smoothly. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Rules, and regulations, IRS guidelines. It's too much, isn't it? For everyday American, everyday taxpayer out there, you know, some of the rules, if you're just W-2, just easy, it doesn't matter. You just go about your life, start running a business. Man, the rules can really stack up. The red tape gets deep. Yeah, am I doing it right? And how do you know if you're doing it right? How do I know if I'm actually following the rules that the IRS has to be able to take the deductions that are available to me as a business owner, as an owner operator, as a truck driver, as a small business guy? And, you know, hey, I don't know that I want the complications in my life to follow all these rules. Some rules are worth it. Some rules are worth the hassle of going through and meticulously following the detailed items of every rule that's out there. Now, is the Augusta rule for everybody? Well, it can be. And it can save you money on your taxes. But is it always worth the hassle of going through and figuring out what's the best way to do this? Now, the Augusta rule can be used anywhere in the U.S. The strategy gets its name from the original scenario where residents of Augusta, Georgia, rented out their homes during the annual Masters tournament. So that's therefore Augusta rule. That's where the Masters is played. It wasn't really originally designed to allow a business owner to rent their home to their business, but it does apply to business owners nevertheless. So how can you take advantage of it? Since this is kind of tricky that you've got to do. The first step in implementing this tax strategy is to know the rules. First is the rent must be a reasonable amount that is supported by market research. An online search for similar properties is sufficient. So, you know, if you got people that do VRBOs, Airbnbs, hey, that's where your research could start. Second, the property must be in the U.S. It doesn't have to be your primary residence. You can rent out your vacation home in another area. The total days rented for the year must be 14 or less for the property. You got to document the payments. It's not enough to follow the rules and qualify for this credit, but you also must properly document the rent payments. When you rent to your business, the business must issue you a 1099 miscellaneous for the amount that was paid. The rent income must be claimed on your personal tax return and then excluded under IRS Section 280A. IRS Section 280A, the Augusta rule. Follow the proper documentation for those payments so that when this comes up as an audit, you can successfully navigate the audit. Substantiate, substantiate, substantiate. In addition to knowing the rules and documenting the payments, you must also be prepared to substantiate the business activity during the rental days, including meeting minutes, daily agenda, attendee list, supplement with pictures. The more you can substantiate, the better. It's even more important for a smaller business where retreats or board meetings tend to be informal. I tell you this because, hey, the Augusta rule doesn't apply to everybody. You can use it if you can substantiate it. And then there's many ways that the IRS is going to disallow this strategy in an audit. If you also get paid rent for your home office, you'll also violate that 14-day rule. So if you're going to try to overcome this, you're going to need to use an accountable plan to avoid generating more rental income. Lack of evidence or deficiency in tracking and documenting rental payments. You can't use a strategy if your home is your primary place of business. So you're going to have to set up a separate place for business. So if your business is run out of your home, you're not going to be able to use the Augusta rule. So we got to remember this Augusta rule is a complex strategy with many rules and many, many requirements. However, the setup for this tax strategy, you really only need to be done once, and then you can execute it every year you're in business. It's a nice way for your business to save money renting, conference space, conference rooms, or other accommodations for company events. So, the rules out there, it's available for you to use. You just got to make sure that you're dotting the I's and crossing the T's behind these events so that you know that you're using it correctly for your business and that you've got it done the right way so that you don't have problems. Being in small business and being a business owner is complex. It's hard. Knowing all the rules, knowing all the stuff you've got to follow makes life difficult. Having good service provider, good bookkeeping, great bookkeeping service, great tax provider is a key to keeping your business going correctly. It helps you keep a watchful eye on your business profits and your expenses, your net income. What am I making? It's not about how much money I have left in my pocket. That's the end goal, is to have more in the bank every year so that you establish a huge nest egg to retire and not have to be in business forever and doing everything, every day, including if you're a W-2 employee. It's putting as much money away and saving money. Hey, one of the greatest books I've read out there is The Wealthy Barber. Saving that 10% right off the top every year, putting it away. If you're in business, Set a goal. Not necessarily save 10% of net income. Maybe it's save 10% of gross revenues. Wouldn't that be nice? Establish a goal. Keep a watchful eye on your business's profits, expenses. If you're a trucker, figure your cost per mile. What does it cost to run your truck? What is the cost to put that truck on the road every mile that it's out there? Doing that cost per mile calculation from profits and losses that we give you, you should sit down and do that one calculation for yourself at least a couple times a year to know that, hey, when I'm looking at a load, is this load going to produce net income for me? Is it going to generate me enough revenue to cover my costs, or am I just losing money taking this load? Know what the minimum is that's out there. Truckers get in trouble because they feel like the truck's got to be on the road no matter what the revenue is, just to make that payment on that truck or the payment on the lease. And sometimes it's not generating enough to cover the costs to put the truck on the road. Make proper tax estimates. Hey, that first estimate is actually coming due for 2025, April 15th, 8 days away. Get prepared. Make those estimated tax payments every quarterly estimate. Now, the IRS is weird. We all know that. Your first estimate is due April 15th. Your second estimate is not a quarter away, is due June 15th. Then it's September 15th. And then it's January 15th. Hey, I don't set the deadlines out there. The IRS does. So make those quarterly estimates. If you can't make them quarterly, make them monthly. If you can't do that, set aside money every month to help pay for taxes come April 15th. Invest that money, but invest wisely. TruckerTaxTools.com, our bookkeeping service. What we try to do is minimize the taxes that you're going to pay, maximize your profits. Kind of a conflict out there, but it's one of those conflicts that's really good for you, because minimizing taxes is a way to help maximize your profits at the end of the day. See, it's not about how much money, gross income did we make. It's what is our net income? What is our take home? What did we keep at the end of the day? How much money did we invest? How much money did we set aside for our future? Maybe it's paying down the loans a little bit quicker because you're on too high of an interest rate. Maybe it's actually doing something people don't do in the trucking industry, and that is start saving for retirement. Set up those retirement plans, whether it's an IRA, whether it's an SEP plan, whether it's a 401k. Do something to save money in your business. And that starts with going to TruckerTaxTools.com. Hey, these hours go by quick. We enjoy having you here at Tax Talk For You. Go over to TaxTalk4You.com and subscribe. Never miss an episode. If you've missed one of our episodes, TaxTalk4You.com has all the podcasts out there. You can catch up to speed on everything that we do and everything we talk about. Hey, join us every Monday, 9 a.m. Eastern Time, right here on Tax Talk For You. Don't miss an episode on W4CY Radio. We're here. You should be. See you next week. God bless.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk For You. hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at taxtalkforyou.com. See you next week at W4CY.com.